And today we're going to tackle a topic that every UK small business owner should be thinking about: how to reduce your corporation tax bill. Now, we all want to keep more of what we earn, right? But the key is to do this the right way, within the rules, and that's exactly what we're going to cover today. So if you're ready to keep more of your hard-earned money, let's dive in. First up, let's talk about claiming allowable business expenses. This is one of the simplest ways to reduce your corporation tax bill. Allowable expenses are costs that are wholly and exclusively for the purpose of the business. This can include everything from office supplies, travel costs, and even the cost of your morning coffee meetings, if it's business related, of course. Remember, the more allowable expenses you claim, the lower your taxable profit, and that means less tax to pay. Just keep good records and receipts, or use an accounting software like Crunch, a simple rule, but one that can save you a lot in the long run. Now, make the most of the Annual Investment Allowance, or AIA. This allowance lets you deduct the full value of qualifying equipment and machinery from your profits before tax. It's a fantastic way to reduce your taxable profit if you're planning on buying assets for your business, such as computers, office furniture, or even a company van. Right now, the allowance is quite generous, up to £1 million. But remember, this only applies to qualifying items. So if you're planning a big purchase, timing it right could really help reduce your tax bill. Another powerful tool at your disposal is the research and development tax relief, the R&D tax relief. If your business is working on innovative projects, whether it's developing new products, services, or even processes, you could qualify for R&D tax relief. This can be particularly beneficial as it allows you to deduct a larger proportion of your R&D costs from your profits, or even claim a tax credit. It's a brilliant incentive for companies pushing the boundaries and could save you a significant amount on your tax bill. Even if you think your project might not qualify, it's worth checking. We've seen so many businesses miss out on this. You can also take a salary up to the secondary national insurance threshold, which is currently £9,100. By paying yourself a salary up to this amount, you not only reduce your corporation tax bill because salaries are tax-deductible expenses, but you also ensure the tax year counts towards your state pension entitlement. It's a super smart way to balance your income and long-term benefits. And finally, don't forget about your pension contributions. Not only are contributions to your pension plan a great way to save for your future, but they're also a highly tax efficient way of extracting profits from your company. Contributions made by your company into your pension are tax deductible, reducing your corporation tax bill while boosting your retirement savings. It's a win-win situation, and it's a strategy that's often overlooked, especially by small business owners. So if you're not already contributing to a pension, now's the time to start. So there you have it. 5 straightforward ways to reduce your corporation tax bill. Remember, the key is to keep good records. Plan ahead and make the most of the allowances and reliefs available to you. And if you're feeling a bit overwhelmed, don't worry, that's exactly why Crunch is here. Our team of expert advisors is always ready to help you navigate the complexities of tax so that you can focus on growing your business. If you have any questions or need personalized advice, don't hesitate to get in touch with us at Crunch. The link is in the description below, and there's an amazing expense guide that's available on crunch.co.uk, so you can go searching for that. Thanks so much for watching. Don't forget to like, subscribe, pass on to your friends, hit the bell icon so you don't miss any of these amazing tax saving updates. So let's keep your business thriving, and see you next time.